Well, hello. Per usual, living on this channel is for educational purposes only. It is not intended as financial advice. It's been long. It's been too long. Thank you to the loyal subscribers who are still here, day in and day out, checking for a new video, messaging me. I apologize for not making a video sooner. It's been 2 months. Feels like yesterday, honestly. Also, I noticed 30K subscribers. Can we get 33K by July 2022? That's the goal. If you're not subscribed, seriously consider hitting that button. And if you want more content from me, I do 3 videos per day for Brave New Coin. We do Setup Monday, Weekly Open podcast, Ledgercast on Fridays with Brian Krogsgaard. All those links are in the video description below. So let's get right to it here. There are people who I think don't understand where we are in the cycle, and they're getting a little bamboozled as far as what they should be doing. And that's fine. I'm not here to trade people's accounts or anything like that, but there's a time to be bullish. There's a time to be bearish. There's a time to be neutral. And we are pretty bullish. We're in price discovery, and I see people who are pulling an Ash Drake. Shout out to Ash Drake, wherever you are. They just don't understand the strength, the power, the glory, the violence, speed, and momentum that we are ready to rip up here. I seriously think we hit 100K BTC by the end of the year, 10K ETH by the end of the year. I think these are realistic targets. Let me lay that out. Secondly, based on seasonality, historically, Q1 is terrible. So if we're going to make our moves, we're going to do it between now and December 31st. If you look at the expiries for the contracts for CME, it's probably like December 25th. I forget what the weird timing is on that. And again, you can backtest all this, look at all the rollovers, look at OKEX since 2016, whatever. You do you, right? So we'll start with the cloud, and we are above the weekly cloud. Bullish TK cross, bullish cloud. If you don't know anything about the cloud, dynamic support resist, using these settings, I'm not going to explain it, but 2061, 2030. The idea is here, when we are below the cloud, we are bearish. We look for shorts. We don't hold crypto unless we want to lose money. When we are above the cloud, we hold crypto or anything because we want to make money. We are bullish. There's a time and a place to look for overextension, divs, all that stuff. Momentum is flat here based on the cloud, based on the TK lines. It isn't rising, right, on the weekly, but we're getting there. We are definitely getting there. And some high time frame zoomed out view, nothing specifically to any component of the daily or whatever, but looking at a pitchfork, the reason I use pitchforks is because I sort of had to. What do you do when there's no targets, there's no support resist? You're in price discovery, right? You can use fibs, which we'll look at. You can use MA multiplier, which we'll look at. But the timing component here is it gives you an expectation for when this is possible. When is this rate of change extension possible? And again, by the end of the year, I like us up here, very similar to where we were Q1 2021. That might be 120, 130, 140. I don't know. I don't think we go that high, honestly. I really like that 100K level, but based on the rate of change, that has a decent shot based on backtesting. I'm just looking at this data here, right? Like, that's all it is. Pick 3 points, you get a rate of change. The rate of change since 2019, 2020 has stayed pretty close to the midline here, the brown zone. And we are getting ready to lift off into overbought territory, which doesn't kick in until above 110, okay? 120, 130, 140. Something super insane would be above 170. Anything up there is very much typically a sell, not always. You can backtest that again, look at all the pitchforks on everything. Sometimes we just go absolutely bonkers above this pitchfork like in 2017. But this is why I use what I use. What else are you going to do, right? You just sort of have to guess. This is yearly pivots, which I also love. They print January 1st at the beginning of the year. So when I'm popping the champagne, the bubbly, the Vouv, whatever or maybe you're a non-drinker, some water, I don't know, whatever people do on January 1st, I celebrate because I get to see the pivots for the year, and we can look at where we think we might go. These pivots are calculated based on the highs and lows of the previous year. Currently, again, it's pointing to 96K, 97, whatever the R5 is here. So it'll print the pivot based on the highs and lows, and then it will calculate automatically these levels. For BTC, typically, These have held up extremely well on backtesting. They're not perfect. They're not always perfect. You know, we randomly just found support here, whatever. But we're randomly at resistance here, randomly at resistance here. Maybe it's pareidolia, I don't know, but it's good enough for me. So I like this level up here. On top of that, take the high, take the low of any range. This all the analysis I ever do is always applicable to everything. I pretty much do the same analysis for everything. So you can use this on Decred, Coin, AVAX, whatever. The targets are what they are based on the fibs, based on the extensions, 86 to 100K. That's the next target for the next move. It doesn't mean it's going to go straight there, but it means that's where we should go if we break out at the current levels. So to me, that's a confluence for targets, confluence of resistance. We should not only hit this target, but ideally we reconsolidate here and then figure out what we do from there. We hit these targets that we hit in Q1, reconsolidated for 6-8 months, and this is the range we got, right? This is what happened post-consolidation. We found a high, we found a low, and from there, if we're bullish, we can put these extensions up here and say, yeah, this is where we're going. It's also the all-time high. It's also price discovery. It's also 6 figures. We've renormalized 30 to 60K, right? The first time it was all-time highs, crazy news. Since then, it's just like, whatever. You know, for most people who have been here for a while, at this point, yeah, it's crazy to see the price that the price is at, but at the same time, it's been normalized for a lot of people. Looking at the cloud, again, on the daily, I wouldn't be here without the cloud. I'm just going to be honest. If I could marry the cloud, I would. But anyway, the cloud is telling you here, momentum's flat. There's a bit of a TKC clamp, which is a TK separation, a special case sort of indicating momentumless, potentially overbought conditions. And you can see an example of this immediately right here in January, where we exceeded the blue line, the Tenkin, greatly, and eventually collapsed back down because we lost momentum and we mean reverted. In bull trends, you will mean revert several times and you will go again. Mean revert here, go again. At the end of the bull trend, right? The trend is your friend until the end. You won't mean revert. You will lose momentum. TK cross happens and down she goes. You know, this was a great example from January to May of how to play these continuations on the cloud. So you're looking for the same type of thing here. If you are cautiously optimistic, if you're bearish, if you want to buy lows, if you don't believe in the rally here, I would be putting bids at 53 because that's the mean reversion level. Another level to watch would be the 200-day moving average, currently at 46. Is that a catastrophic, cataclysmic obliteration of price from the current level? It is. But that's exactly why you'd want to be buying down there. Those are where the bids should be. And these will move up potentially over time, especially the 200-day moving average. The Kijun will move up as price breaks the range. But if I'm ever in cash, I'm full crypto right now. So if I'm ever in cash, this is where I hold bids. Something also a word of caution is this building flat Kumo level here at 48. You never want to see anything flat on the Kijun, on the cloud, anything in the cloud system. If you are expecting a bull trend, you want everything to be rising, cloud rising, TK lines rising. When you lose momentum, you risk mean reversion. So what you don't want to see is a repeat of this edge-to-edge move, which would be from 58 to 48, basically. I'm just sort of projecting into late December. And this is what we could see in January. We could see basically a repeat of this in Q1, but early, I think. So I'm always thinking decision tree. I'm bullish right now, full crypto. My bids here, potential watch for EDE, edge to edge here, TKC clamp. But things look great. Things look amazing. This is the alligator fractal. These are 3 EMAs, the 5, 8, and 13 in the lines here. The fractals print on high, low, high, or low, high, low, or high, low, high. And you can use these as entries and exits and stop losses. So similar to the cloud dynamic support resist, if we're above the alligator, you're bullish. If you're below, we're bearish. It can get noisy, it can get messy because it is lower time frame MAs. But currently we are above everything and we're printing a stop loss fractal at 58. So one way to use this with the cloud is you'd have a stop loss at 58 if you're long, and you'd have bids at 53. And you'd also have bids, whatever lower than that. But what you don't want to see is your stop loss at the same price as your entry for the, your positions, because that doesn't really make much sense most of the time. So trailing stop loss is currently 58. And again, you can backtest this, do whatever you want. It's not perfect, but it's generally pretty good. And then as far as entries are concerned, you're actually getting an entry today if this closes above this fractal. And it's always the line. It's always a line on the wick, not like where the fractal sits. So a break above 62 on the close is a long entry signal. So you can add to your long. That's what it's telling you here. If I'm wrong, if I'm completely out of whack and we're momentumless and we stay momentumless, we probably stay within this pitchfork. Now you don't need a pitchfork to know that, here's a line, draw some horizontals, but this is also another rate of change to consider. I think we will cancel this out, and anything above the current high will negate this rate of change. Some other things fundamentally that I love to look at during bull trends, now that we have 10 years of data, happy birthday Bitcoin, we can look at backtesting. Not a lot of data, right? But it's enough. And if we look at hodl waves, which measure when coins have moved, we can see how many coins have moved within the past week, past month, 3 months, 6 months, 10 years, whatever. The most important ones to me are the 6 months or fresher moves. Historically, once the chain movements reach 50 to 60%, that has been the high, that has been the cycle high. This doesn't correlate perfectly one-to-one, but for me it's good enough. In 2013, we saw that twice, 2013, 2014. We saw it in 2018. We saw it to a much lesser degree on the Q1 2021 high at 40%. And currently these total 30%. So 30% of the coins have moved in the past 6 months. 6 months is another way to say that. And if this gets to 50, 60%, that is probably going to be the high. And you're starting to see this pick up on these lower time frames. So it's something to track over time, slowly, but it's important to watch. I just add this to the list, right? You can literally make a checklist on some spreadsheet of all the stuff to watch. Does this look overbought? No, we're fine, right? That way you're agnostic from price, you're removed from that, and you're just paying attention to the backtesting, basically. Here's another one. Look into Bitcoin.com, amazing website. Just use it, right? You don't need me to look at all this stuff. But on backtesting, this is the 2-year MA multiplier. Down here is the MA. The multiplier is up here. This is a 5 times multiplier of the 2-year MA. That's how this works. Gives you bands, gives you a range, gives you a buy zone in the green, sell zone in the red. Historically, this has been an excellent indicator for selling highs and buying lows. This isn't going to tell you the exact top. It's not going to tell you the exact bottom, but it is going to give you a really good idea of A, where prices could go in a cycle, and B, where you should start pumping the brakes, where you should start gassing the tank, right? And currently, these highs are at 127,000. So we are not technically overbought on this until we're above 127,000. Every cycle high, for the most part, since 2011 has hit these levels. Even the Q1 2021 high briefly, arguably, was close enough to that. So this is telling me my 100K target is even not bullish enough. This likes 127, and that's going to keep increasing slowly over time. Logarithmic growth curves, kind of the same idea. Again, backtesting, it's all right here. That's what I love about this high time frame stuff. Boom, boom, boom. These are your all-time highs. Okay, great. Where are we going? We're going all the way to, again, that 127 level pops up, 140, 150. I don't know. It all looks good to me. Just let it go, let it rip. 200-week moving average heat map just tells you how quickly price is moving up according to the 200-week moving average. And it gives you warning signs, overheated, overbought type stuff. It also gives you a base for price. Let's say things collapse tomorrow. 16K is the generational buy based on this indicator. Again, since 2011, that has been the bottom every single time. Every single time. Corona, 2018, 2013, 2015, whatever. It's all been the bottom. If we break that, it's probably failed experiment territory. But currently the heat map is telling you we are still cool. Stay cool, boy. And we're not overbought based on this metric yet, or even close to it. You can see we got pretty close to overbought in Q1, pulled back. So we've reset all that overbought momentum. Stock to flow, I don't like it, but some people do. Backtesting, it is what it is, right? It looks okay. And we're currently on the money as far as expectations. Currently 76, 78. This doesn't help me with trading decisions. It's just fun to look at. Pi cycle top, another one that is dead on the money every single time. Within 5 to 10 days, it has been the top every single time, including something that I said to just ignore because it made no sense, including this. That was the top within 3 days. So we've even reset this, and it's telling you we are a ways away from crossing on the Pi cycle top indicator. MVRV, measure of market cap versus on-chain activity. Again, this gets overheated when we're at all-time highs. Not anywhere close to that yet. Tons of room. Tons and tons of room. These are all things you just have to look at. Really, once a week is probably good enough for the average person. And it's a way to calm the euphoria. If I'm right, if we 2x from here, which is looking very, very possible. If we 2x from here, and I'm right, just look at all this stuff. If you're asking yourself, should I be selling here? Not investment advice, but look at all these collectively together. What does the MVRV look like? What does Puell multiple look like, which is daily coin issuance versus daily coin issuance of the past year? Basically, if miners are getting too rich, they start selling, supply increases, on-chain activity increases, exchange flows increase, that sort of thing. Currently, we are tame, mild, no big deal, nowhere close to being in the danger zone. And something I just saw that he added to the website, advanced NVT signal. I've never been a massive fan of NVT, but if something I'm backtesting makes sense, this is just some random calculation to me. I'm sure it means something. Maybe in the explainer he talks about it, but if this looks good on backtesting, yeah, sure, right? Past results don't predict the future, but this looks good. This it fits my narrative, so I'm going to use it. No, it's still in the lower bounds here, right? It's not in the upper bounds. This is just showing NVT at each price level based on these parameters. Standard deviations does line up pretty well, and currently we are, much like the Puell and the MVRV, nowhere near overbought, right? You don't need to understand NVT as much. You don't really need to understand any of this stuff to know, like, okay, this is where I sell, right? That's all it comes down to for me. I didn't understand any of this stuff in the beginning either until I looked into all of it in a more deeper level, but it's all there, free to use. Here's exchange reserves from Crypto Quant. Now you have to be careful with values like this because you have to really trust the data. And if it's not your data, it's harder to trust that data. You're going to get different values on glass nodes. You're going to get different values on all different websites. But according to Crypto Quant, we are currently at a multi-year low. I should put an echo on that just to emphasize it. Multi-year low for exchange reserves, continuing to drop. This is just simple supply demand. As supply goes down and demand is the same or rising, price goes up. That's just it. Something else we can look at related to Puell multiple is miner outflows. As Puell multiple spikes, you're going to see more outflows most likely. Miners are continuing to just do nothing. They're selling sort of at their base rate and not really selling more. You can see into January from March, they were selling more and more and more. Specifically, I think this was one guy, Wang Chun or something. I forget his exact name, but some Chinese miner who's got $1 bajillion at this point. So this is something else to watch along with exchange flows, along with reserves. If miners start selling more and more and more and more, eventually supply demand hits a tipping point and boom, that's towards the top. So you're going to see that on not only exchange reserves, not only miner flows, you're going to see that on the hodl waves. All this stuff sort of looks at the same data. Real quickly on ETH, the analysis for ETH hasn't been simpler in years. It's obvious, cup and handle, breakout target is 6K. 6666 would be a great number to temporarily top at. A wick there would just be hilarious, but chart pattern is bullish. The breakout is bullish. It's in price discovery. It's at all-time high levels. I don't know what else people want if they're bearish. I'm sorry. Hate to break it to you. This looks amazing to me. The TK lines are even closer together than they are on BTC. You can see you got your TK recross above cloud. The most bullish signal in the cloud system. RSI looks fine to me. Potential slow bear div growing, but this can easily get canceled out with a higher high in RSI here. So fibs tell you higher, chart pattern tells you higher, cloud tells you higher. Short it if you want at your own peril. The alligator fractal tells you higher. It crossed down here early October. So down here, it's telling you to start to go long, and then you're adding here, adding here, adding here, adding today. This is your trailing stop loss here, here, here. Currently, it's at 39K. Sorry, 3,900. And the Kijun is at 35, 34. So stop loss at 39, bids at 34 is how I would read that. ETH, I can't use the 2-year MA, so this is the 1-year MA. ETH doesn't have enough data really to use the 2-year MA. But again, on backtesting, I don't care what it is. I don't care if it's moon cycles. I don't care if it's throwing chicken bones in a jar that your cat licks once. Like, I don't care what it is. If on backtesting it works or has worked, it's good enough for me. So the 1-year MA, use the 1.5 year MA. I don't care. This is the buy zone. This is the sell zone. The sell zone is currently 11K. Currently 11K. I'll say it again. Currently 11K. Excuse me. So I don't, as a non-ETH maxi, I don't like that target, but it is what it is. That's the target. So, yeehaw. And as this breaches the midline of these multipliers, it's more likely, I think, to reach for the actual multiplier. I think it's just a way of showing you momentum ultimately, if it can break the midline. At least again on backtesting, I might just be reading into that a bit far, but that's what I'm basically seeing. We can also draw a pitchfork from 2021 for ETH, and this could start to explore crazy levels up here. I'm not going to rule that out. I'm not going to expect it, but this is one rate of change to consider. I think it's too early to look at this as real rate of change, but just as a consideration. The more this fills in, the more I consider it like having weight on the rate of change, and I can expect that level more. I think it's a little too early to get crazy. It's like a 22K target by end of year. And just like BTC's supply demand stuff, it's pretty straightforward with ETH. This is ETH locked in ETH 2.0, which is basically vested, squirreled away, not in the supply. It's been rising since November, since they started this shindig. Currently, it is at nearly 8.1 million ETH staked, I think, right? That's not total USD value. That should be total ETH value, which is massive. Do the calculations of circulating supply. Here's ETH exchange reserves. It could not be simpler. This is something you could not ask for. I could not draw this if I tried. Reserves declining, prices rising. I mean, it's pretty straightforward to me. On top of all that, ETH is what it is. ETH is a mess of a coin. It is also deflationary. So people are sending it to ETH 2.0, removing it from exchanges, and oh, by the way, it's deflationary. Since EIP 1559, this was the first deflationary day, full day, and it had some deflationary week as well. So what are you doing? What are you doing? Shorting this? ETH BTC is a mess. I never trade this directly, but this does look like bullish consolidation. At this point, it had a risk for an inverted Adam and Eve. It's still trying to figure itself out, I think. But ultimately, 0.1 looks like a legitimate target. So if you think BTC is going to 100K, 0.1 on this, do the math on ETH target. But this looks fine. This looks momentumless, but it also looks fine. It looks like bullish consolidation to me. It's sort of different than it did at these levels previously. It doesn't have these crazy highs. It doesn't have this huge Adam and Eve. It is just tight consolidation currently. And back to ETH just being a mess. Fees, this is what ultimately could kill the rally, is if fees go to insanity again. You can tell the priorities of the devs. The priority is not proof of stake for them. The priority is pump-mentals. That might have been the path of least resistance, but they know fees are a problem. What did they choose to do first? They chose to do EIP 1559. Is that helping the user experience? Is that helping the average person? No, it's helping the rich get richer, which is fine. I'm grateful. Thank you for pumping my bags. Okay. Average fees per transaction currently still $50. And if you zoom way out, this is what ETH used to be. Now this is what it is. And you can say it's got many more people using it, which it does. But this is what's going to kill price just like it did last time. Not enough average people using the chain. So look, that's all I have for this one. Like, dislike, comment, share, subscribe. Let me know what you think. Are you bullish? Are you bearish? Are my targets too low? Are we going to 300K? I don't think we will. I think, 250 maybe is my sell everything target. But we'll continue to look at this as weeks go by. Like, dislike, comment, share, subscribe, and happy trading.